Welcome to our deep dive. We're tackling common mistakes in the cryptocurrency market. It's for anyone looking to make smart moves in crypto, but maybe feeling a little overwhelmed by it all.
Yeah, like it's this exciting jungle, but you got to watch out for those hidden dangers.
Yeah,
We wouldn't just wander in unprepared.
definitely not. So this source dives right into FOMO, that fear of missing out when you see a coin taking off and you just gotta jump on board.
Oh, I know that feeling.
But that can be a recipe for disaster. The source really emphasizes research, but not just like skimming the surface.
Right, it's about going deep, like really understanding what you're putting your money into.
So treat it like a serious investment, not just a lottery ticket. What are some practical steps to research a project properly?
Well, first dive into that white paper. It's like the project's DNA, laying out the goals, the tech, the team behind it all. Look for transparency, a clear plan, and people with a solid track record.
Makes sense.
And don't just get caught up in the hype. Dig deeper, check out their website, forums, independent reviews, that sort of thing.
Like getting a second opinion.
Exactly. And remember, if something sounds too good to be true, it probably is.
Okay, so research is key, but even with the best research, putting all our eggs in one basket can be risky.
Absolutely. That's where diversification comes in.
How do we do that effectively in the crypto world?
Think of it like building a house. You need a strong foundation, then you add sturdy walls, a good roof, right? Same with crypto.
So a balanced portfolio with different levels of risk.
Yeah, like a solid base with Bitcoin and Ethereum. Those are like the blue chip stocks of crypto, relatively stable.
Got it. So those are our foundation.
Then you can spice things up with some promising altcoins. Smaller projects with higher growth potential, but also higher risk.
So sprinkle of those for flavor.
And don't forget the stable coins.
Those are pegged to something stable like the US dollar, right?
Yep, like having some cash in your portfolio to weather those market storms.
So diversification helps manage risk, which leads us to emotional control. Another big thing the source talks about.
Oh yeah, the emotional roller coaster of crypto.
It's so easy to get swept up in the highs and lows. Letting those emotions drive your decisions can lead to costly mistakes.
It's like driving a car. You wouldn't slam on the gas or brakes every time the road changes slightly.
You need a steady hand and a clear vision. How do we apply that to crypto?
A well-defined risk management plan is key.
Okay, tell me more.
First, set a strict budget for crypto. Decide how much you're comfortable risking and stick to it, no matter how tempting things get.
Boundaries and discipline.
Then there are tools like stop loss and take profit orders.
Those sound interesting.
They're like automatic guardrails, selling your holdings at specific price points, limits your losses or locks in profits, takes some emotion out of those tough calls.
Smart. But even with the best planning, there are still scams out there.
Unfortunately, yeah, the crypto world has its share of bad actors looking to take advantage.
So how do we spot them? What are the red flags?
Promises of unrealistically high returns are a big one. If it sounds too good to be true, it probably is.
Right. No get-rich-quick schemes.
Then scrutinize the team behind the project. Are they transparent? Experienced? Can you verify their backgrounds?
It's like doing a background check, making sure they're legit.
Exactly. And be wary of unsolicited messages, especially those amazing investment opportunities. They're often phishing attempts to steal your info.
Now trust your gut. If something feels off, it probably is.
Right. Better safe than sorry.
Okay, we're researching, diversifying, managing risk, dodging scams. But what about the actual trading? Charts, indicators, order books, it can be a bit intimidating.
I get it. It's like learning a whole new language.
Where do we even start?
Start with the basics. Educate yourself. Technical analysis, reading charts, understanding indicators, and don't forget fundamental analysis, evaluating the project's true value.
So it's an investment in learning itself.
Definitely. And practice is key. Many platforms offer demo accounts to trade with virtual money.
Risk-free practice, like a test drive before buying the car. But we also need to consider those pesky transaction fees, right?
Yeah, those can add up, especially for frequent traders. They vary depending on the blockchain network and how busy it is.
So Ethereum, for example, can have those high gas fees sometimes.
Exactly. But there are alternatives like Binance Smart Chain, Solana, Polygon, faster transactions, lower costs, good for active traders.
Like finding a shortcut to avoid traffic. But once we've got our crypto, we need to keep it safe.
Absolutely. Security is paramount in this space.
So where's the safest place to store it?
Cold wallets, also known as hardware wallets, are the gold standard. They store your keys offline, making them much harder to hack.
Like a high-security vault for our crypto treasures?
Exactly. But even with those, you still need to be vigilant online.
What else can we do?
Two-factor authentication on all your accounts, Strong passwords and back up those keys.
Okay, so we're storing our crypto securely, trading smartly, but there's still that market volatility to deal with.
Oh yeah, those wild price swings. They can make even seasoned investors question everything.
I know, I felt that. So how do we stay calm and avoid those impulsive decisions?
Have a clear, long-term strategy and understand how to manage those emotions.
Easier said than done, especially when you see those red numbers dropping.
True. But start by defining your goals, risk tolerance, investment timeline. Are you in it for the long haul or looking for quick gains? Once you have a plan, stick to it.
So long-term vision, not getting distracted by those bumps in the road.
And consider dollar cost averaging, or DCA. Instead of investing a lump sum, you spread it out over time.
Buying a bit at regular intervals, regardless of the price.
It averages out your purchase price and reduces the impact of those price swings.
It's like a steady drip, rather than a big, messy splash. But it's not just about investing, we also need to stay on the right side of the law.
Right, taxes and regulations are important.
It can feel overwhelming, though.
Definitely. But start by researching the rules in your country.
So we need to become crypto tax experts.
Not necessarily, but understand the basics of capital gains tax and how it applies to crypto. Keep detailed records of all your transactions and consider using tools like coin tracking or coin.
Tech to the rescue. But even with all this knowledge, it's easy to fall into the trap of following the crowd, taking advice at face value.
That's why thinking for yourself is so crucial.
So we've covered research, diversification, risks, security, emotions, even taxes.
It's like we're building our crypto survival kit.
Exactly.
But there's more to explore. In part 2, we'll dive into some advanced concepts and the future of this amazing space. Stay tuned. Welcome back to our crypto deep dive. We've covered the essentials, but there's always more to learn, right?
Absolutely. Now I'm curious about those more nuanced strategies, the kind that set the pros apart, you know?
Well, our source digs into a few more subtle mistakes even experienced investors make, like having a clear exit strategy. Many struggle with that, but it's vital for success.
I'll admit, an exit strategy always seemed a bit final to me, like closing the door on potential gains.
Think of it more like taking control. It's not about closing doors. It's like having a plan for your investments and for your emotions.
Okay, I like that.
It's like setting sail on a voyage. You wouldn't just drift aimlessly hoping to find treasure, would you?
Yeah, you need a map, a destination.
Exactly. An exit strategy is like your crypto compass, helping you navigate those market ups and downs.
Making those tough decisions when things get choppy.
Yeah, it's about having a plan for when and how you'll sell. Whether you hit a profit target or the market changes or you just need to rebalance your portfolio.
So it takes the emotion out of it, prevents those impulsive moves we regret later.
Exactly.
Speaking of protecting ourselves, what about security beyond just wallets? The source mentions neglecting that can be a big mistake.
Absolutely. Even the most secure wallet won't help if you're careless online.
Right. It's like having a high-tech security system, but leaving your doors wide open.
A perfect analogy. So strong passwords, two-factor authentication, those are just the start.
What else should we be doing?
Be super cautious about phishing scams. Those are when someone tries to trick you into giving up your private keys or login info. They might pose as a legit website or service. You got to be careful.
So double-checking those URLs, being suspicious of emails and messages, especially those with links.
Right. Treat every link like it could be a trapdoor.
Good advice. Now, what about when things aren't going so well, when an investment is tanking? The source talks about chasing losses, which sounds like a dangerous path.
It often is, yeah. It's that emotional trap of trying to recover money quickly, like digging yourself deeper into a hole, hoping to magically reach the surface.
Oh, I've been there, feeling that urge to double down, thinking I can outsmart the market.
It's a common feeling, but the key is to step back, take a breath, and reassess.
Okay, so not letting fear or ego drive those decisions.
Exactly. Ask yourself, is the project still fundamentally sound? Has the market shifted? And are you still comfortable with the level of risk?
So sometimes the best move is to cut your losses and move on.
Absolutely. Acknowledging that losses are part of the game, especially in crypto.
Tough, but true.
Now, I'm curious about your thoughts on the bigger picture. Where do you see this whole crypto thing going?
Honestly, it feels like we're just at the beginning. We've talked about buying, selling, trading, but there's so much more emerging, right? All this stuff about DeFi, NFTs, the metaverse, it's mind-blowing.
It is. The applications of blockchain go way beyond just digital currencies. DeFi is one area that's really exploding.
DeFi. It sounds intriguing, but I'm still a bit fuzzy on what it actually is.
Imagine a world without banks. where you can access financial services directly, peer-to-peer.
So cutting out those middlemen, giving people more control.
Exactly. DeFi aims to rebuild traditional finance on the blockchain.
Okay, that makes more sense. But how does it work in practice? What are some examples?
Lending platforms are a good example. You can lend your crypto and earn interest or borrow against your assets, all without a bank.
Wow, that's amazing. So it's not just lending and borrowing.
No, there are decentralized exchanges too, where you can trade directly with others.
Cutting out those centralized platforms.
It can be more efficient, potentially even more equitable than traditional systems.
I see the potential there, for sure. Now, what about those NFTs everyone's talking about? I've heard stories of people buying digital art, music, even virtual real estate, but I'm still not quite sure I get it.
NFTs, or non-fungible tokens, are basically digital certificates of ownership. Each one is unique. You can own and trade digital assets in a whole new way.
So it's like owning the original Mona Lisa, but digitally. But why are people paying so much for them? What makes them valuable?
It's a mix of things. Scarcity, for one, there's only one original of an NFT.
Yeah.
But also the underlying value of the asset itself, whether it's art, a collectible, access to a community. And then there's the speculative element, the belief that their value will keep going up.
So art, collectibles, and speculation all rolled into one.
Exactly.
It's fascinating how technology is blurring those lines between the physical and digital.
Yeah, and speaking of blurring lines, there's the metaverse.
Okay, full disclosure, the metaverse still sounds like something out of a sci-fi movie to me.
Well, imagine persistent 3D virtual worlds where you can interact, create, trade, even own virtual property. That's the metaverse in a nutshell.
So it's like taking the internet and making it a 3D immersive experience.
You got it. And blockchain provides the infrastructure for ownership and commerce in these worlds. It lets us verify ownership, trade securely, even participate in governance.
Wow, so the metaverse could be this whole new frontier for creativity, community building, entrepreneurship, but it all feels very hypothetical, you know?
It's early days for sure. There are still technical and social challenges. But the potential is huge. Many see it as the next evolution of the internet.
Blending the physical and digital even further.
Exactly.
It's exciting, but also a bit daunting. There's so much happening, so much to learn.
That's true. The best advice I can give is stay curious, keep learning, and don't be afraid to experiment. The crypto world thrives on innovation. Those who adapt and embrace change will thrive.
So it's not just about making money, it's about being part of something bigger.
Absolutely. Crypto is more than just an investment. It's a movement, a new way of thinking about value.
I'm starting to see that. Like, we're on the edge of something new, and crypto is playing a big role.
It definitely feels that way. But remember, just like venturing into uncharted territory, there are risks. Stay informed, be cautious, and never stop learning.
Great advice. We've covered DeFi, NFTs, even the metaverse. The potential is huge.
It's been an insightful journey so far, but we're not done yet. There's one more crucial element to discuss, something that can make or break your success in this space.
Wow, we've really gone deep in this deep dive, haven't we? From the basics to DeFi, NFTs, the metaverse, it's a lot to take in.
It is, but as we wrap things up, there's one more key point from our source that I think ties everything together.
You're talking about thinking for ourselves, right? Not just following the herd or taking every piece of advice as gospel.
You got it. It's so easy to get swept up in the excitement, see others making money, and just want to jump on that bandwagon.
Oh yeah, I've been there.
But remember, every investment decision should be based on your own research, your understanding, and your risk tolerance.
It's like having your own internal compass, navigating through all the noise.
Exactly. But it's tempting to rely on those who seem like they know it all, right?
Totally. The gurus, the influencers, they make it sound so easy.
But everyone has their own biases, their own motivations. What works for one person might not work for you, and not all advice is good advice.
True. So it goes back to that critical thinking, but how do we actually get better at that?
Well, start with a healthy dose of skepticism. Don't just accept information at face value, even if it's from a source you generally trust.
Question everything.
Exactly. Dig deeper, look for evidence, not just opinions, and consider the source. Do they have a vested interest in promoting something?
So be a bit of a detective, gather the facts, form our own conclusions.
Exactly. And remember, it's okay to disagree with the so-called experts. It's your money, your investment, your decision.
Thinking back, I definitely fell into that trap of blind faith early on. Learned some expensive lessons, but hey, it taught me to take ownership of my decisions.
Those learning experiences are so valuable, they shape us as investors.
It's an ongoing journey, right? Always something new to learn, some new challenge.
For sure, the crypto world is always evolving. That's what makes it so exciting.
And a bit scary sometimes.
Definitely. But that's the nature of a frontier, full of possibilities. But it also means there are risks. Remember the lessons we've discussed. Stay informed, be cautious, never stop learning.
This deep dive has been amazing, covering so much ground. From those first steps to the complexities of DeFi, NFTs, and the metaverse. But that idea of independent thinking, that's the biggest takeaway for me.
Couldn't agree more. Knowledge is power, but only when combined with critical thinking and a healthy dose of skepticism.
So as we wrap up, I hope you, our listener, feel more equipped to navigate the crypto world. It's a journey, not a destination. Stay curious, stay informed, and stay true to your own principles.
Well said. And as you venture into this exciting space, remember, every challenge is an opportunity to learn and grow. Embrace the uncertainty, explore the possibilities, and never stop asking questions.
Until next time, happy investing.